right, let's jump into things. It's 10:15 on 13th of May, so Tuesday session, just sort of slowly sort of getting underway in that, and been a pretty very eventful sort of week in that already. It's only one session in, but on the data front, pretty quiet. Not really much sort of coming out through yesterday at all. Though of course, the big sort of things and the big revelations were obviously the China talks from over the weekend, and then right at London's Open yesterday, they sort of made the announcement of basically a reduction in the tit for tat tariffs, sort of going back and forward, and made substantial progress and these kind of things. And the market, particularly equity markets, absolutely loved it. US dollar, like it was testing for a bit of a breakout and that, so I'll get to the DXY chart in a moment, and it absolutely exploded off that. So yeah, super strong start to it all, and now we're sort of hitting some pretty key levels. So expecting a little bit of a cooling, but of course we've got CPI tonight from the US, and if I sort of tick through here, so just on the fact of CPI, we're looking sort of headline figure to be coming in sort of still pretty flat, right down into their target, but not at their target. So their adjusted target of their sort of, oh, actually, 2 to 3%, yeah, that's okay. Well, yeah, we're into that now. I think there's sort of the expectation is that you can keep driving it down to 2%, which is what they'd want to see. So, any number 2.4 or above is probably going to be seen, obviously, a little bit sticky still. And then if you look at the sort of the month on month and also the core month on month, both of these of which are looking to sort of creep up here a little bit as well. So should these numbers come in at 2.4 and above, and these come in, the month on months come in, basically as expected, you could see that give US dollar another little bit of a kick, and it's at quite a crucial point on DXY at the moment. So I'll cover that when I get into the chart. Apart from that, data-wise now, we've got a bit of Aussie data coming out in the next hour, well, next 20 minutes and then next hour, sorry, 15 minutes. Consumer sentiment looking pretty poor. If we have a look at sort of where it has been previously, it obviously had quite a big sort of drop off down there. So looking to see, it doesn't for some reason give us a bit of a forecast, but it does sort of, I mean, that's shocking. I mean, compared to everything else that it has been previously, April, I mean, on the back of sort of like all the tariff stuff and all that kind of stuff coming out, very shocking. So it'd be interesting to sort of see when do they actually take this gauge from? Because obviously, as I said, equity markets loved it yesterday. They absolutely ripped through the roof in that. So has that picked up the sentiment? I know people say, oh, the economy isn't the stock market, but it does make up a large portion of what people see as sort of like their sentiment for stuff. So, excuse me. See if this can sort of pick up a little bit. A higher number is obviously going to be a little bit better for the Aussie dollar, but Aussie is very much flirting with some major levels of support and potential breakdowns. Business confidence, -0.3. Again, it's lowest it's been for quite a while. Um, so yeah, it seems back in again January kind of thing. Bit of a spike up in that in March. But actually, there's a revision. Was it revised up to rise from four? But yeah, so again, look, if the business confidence isn't up, if the sentiment isn't up, Aussie is a risk asset. It runs with the risk and the risk on attitude. So if it doesn't have the sort of backing of that, Aussie very much could be susceptible. I think the CPI is going to be the big mover. But obviously, this is something to plug in for Aussie as well, and could sort of stifle any sort of like potential gains through the session. Um, I will cover Aussie because it is really sort of bucking the trend of a few things at the moment, and should those little things that may be holding it up, say equity markets at the top, and that should they sort of start to sort of cool off or roll over a little bit, we could be seeing a little bit of a bit of a sort of whack to the Aussie. So with that, let's jump into the charts. So we've got DXY, and if you've been sort of watching what I've been doing, I've been calling this big sort of like bottom breakout for quite a while now. Actually, through this period here. So I did have a little bit of heartache with these little internal structures breaking time and time again with it all. But of course, coming into the end of last week, 104 was the big level that we were looking at for a long time. Got the breakout, got the nice, like structurally, this is a beautiful trade. This is a bit of a more, wouldn't say medium term because it's obviously still going back to March, but that little sort of breakaway channel of falling resistance of sellers provided a good sort of confluence topside backtest for that break that we saw sort of into the end of last week. And it's also the backtest of the sort of this big horizontal area through here. So, this structurally is working very well. They sort of worked very hard to get this move coming through here. And then, of course, as I said yesterday, gap up from the fact that they had the talks over the weekend, the fact that, let's put it onto 1 hour, gap up from the talks over the weekend. Trump was touting it as being really sort of, positive moving forward. And then, as you can see here, when they actually announced, which is 5 o'clock right on London Open, it just went bang and took off. So it really sort of flew up here. And the two levels that I was looking for, obviously, which you sort of marked out, was around this sort of 103 area. This more is a bit of a speed hump kind of area, wasn't a main target. This was kind of the main target here. So we've kind of sort of, we've hit the main target that's been clipped twice. We got actually, if you look into this, it's almost like a little 3 drive up into this area here. So, hitting into a sort of identified area, which is obviously a resistance area for us. It's bound to see a little bit of a cooling off, which is what we sort of called for over the weekend. You can see that, this little low over here wasn't really something that I was like overly concerned. I didn't think it was going to do all this work and then just come up and hit this 101.40 or whatever, 101.30, and then sort of fall over. It's done too much work and it's sucked out too many positions down here to just go blip and then fall over. Where it is coming into now, as we can see, is a big confluence of obviously this horizontal, which again isn't like a major level, but it is something that we sort of identified. And also on top of that, the confluence of the top side of this falling resistance through here. So, this is where we sort of thought it would come through to. We're looking potentially for some sort of consolidation up around this area. As I said, CPIs tonight. If CPI sort of comes out and it's still consolidating around these highs and we get a high number, that could be the driver that gets this thing to push out here. And that is going to be very significant in my opinion. I think the fact that we've got this big sort of falling resistance coming down through here, I think this has got room to move a little bit. Like, I know a lot of people are sort of calling sort of, much lower numbers and, the main sort of leg is like down here, up here, and now we're going to do this. 100% plausible. I think this move potentially could be coming like this though. I've seen this thing too many times, and this will be the famous last words because it'll fall over and go right down now. But too many times people try to jump on this thing and fade it because we've got such a bearish run into it. It pops up a little bit. People try to fade it. It steamrolls them. They try to fade it. They steamrolls them. If we look back previous times that this has done it, these kind of areas through here, this was just before the election. You know what I mean? It was rolling, coming down, and bang, we had another couple of months or two of it sort of going up through there. Same from some of these other big sort of runs that we've had. If you look at these areas here, people try to fade it and it stamps on them time and time again. You know what I mean? I covered this the other day in one of the videos about the sort of length of time that these moves have sort of lasted. And generally, they're not going to, if you spend all this time sort of like down the bottom building a base like this, you're not going to come up for, a day or 2 days and then roll over, most likely. Nothing's ever 100%. But I just sort of feel that particularly with all the failed efforts and the failed efforts coming down here, that this thing's got the ability to sort of keep charging up here. Till we sort of see some like incredibly sort of weak data, we see gold ripping back up, these kind of things, I think this has got the ability to sort of to carry on a little bit. So I'm certainly not going to be sort of fading this thing day one, day dot of the breakout. If we flip quickly to a weekly, so this was the weekly view, was it? Yeah, this one here. So the idea with this was potentially to see this sort of move coming up through here. As I said, it does have the ability to come back down here and then sort of move back up to it all. But I'm sort of feeling more the correction of this should look to sort of potentially, should this RSI keep continuing up and supporting it with some strength, come back up and maybe even take out these highs over here, 104, 105. It would give a nice sort of structural sort of retest of this little support that we had before the breakdown. It would definitely sort of wipe out a lot of people. I have a feeling that this candle should, particularly with this CPI coming up, we could see this as quite a solid blue candle coming up and looking. First target would be 103 for this body fill. We're going to have a little bit of resistance around 104. This little gap through here, so to see on this one, that's your election gap. Not that it's a super thing because obviously it left the gap and then filled the gap, but you can see that the market did sort of think about it around this area as well. So I wouldn't be surprised if we sort of can sort of look at these as our two targets moving up, 103 and then 104. Potentially sort of in the next sort of week or so, and then moving on from there up to maybe even retest this 105 area. So I do think there is some upside to come with the DXY. If you get onto lower time, because that's obviously on a weekly, so it's quite a high time frame there. As I said, a little bit of a sort of sell-off this morning. That's fine. It's coming off a resistance area. It has been a nice little pop. I think this is really just, I don't expect to see a great deal sort of through the session today. But I wouldn't be surprised if we do get at least minimums of a consolidation around here. I'll be surprised if certainly I don't think we're coming down underneath sort of 101.20. Any sort of pullback down here, I imagine to be bought up from this zone. If not, to sort of really just sort of mull around this area sooner. As I said, CPI is looking to come in a little bit hot. So that could lead into some early sort of positioning for that kind of stuff there as well. So it's just that's something to sort of keep an eye on. All right, above, pretty much take out the highs and we're looking at continuation. I mean, there's not really a great deal that you can sort of take away from that. And onto Aussie, because Aussie came down and we've hit two of our targets now. Basically sort of these are the three areas that I was looking for through this session here the other day. Remember that we got that 3 drive up. This is the big range that we had. 3 drives up out to the top, and that's a failed breakout. Come back in, retested, and sold back down. So we saw a big pop yesterday. Again, it was around that sort of time of London Open when the news came out. They're like, oh, yep. So then, in theory, equity markets went through the roof. One strengthened up. They're two things that should be sort of pushing Aussie up, and we saw it for a split second. But again, you got to look around. What did the market do with that little second of optimism? What did it do when it's like, oh, look, here we go, because it went bang, shot straight up here. They said, great, bang, smashed into it. Now, why are you going to sell into something that's seemingly very positive? You know what I mean? Like if you're thinking, oh well, this is great, that's the missing pieces of the puzzle, and Aussie's going to be going up here now. Why would you smash into it? Well, you smash into it because you don't think it's going up here. You think it's coming down here, or even worse, down sub 62. And that's exactly what we saw yesterday. It had the opportunity that the market didn't latch onto it and run with it. They used it as an exit position, a sort of a sell option. And that's the thing that you can read into that bit of price action there. And it's obviously moved back down. So as you can see, this is the point of identifying these spots. Look, this pretty much hit right on the money. We saw the market go, yep, cool, bang. Second tap into it, or technically third tap because he had a little touch into it here. Third tap into it, bang, it went down. This is not a major level, but it's a level that we did have obviously identified. Again, market used that as its low overnight. If we see this come back down here and push through here again, so underneath sort of 65.54, then we're looking down at 63.20s. 63.20, although it hasn't got a lot of touches around this area here, this is what I kind of am calling the last line of defense for the Aussie at this point here. I believe there's going to be a lot of stops underneath here. I believe that sort of should you break down here, then you're going sub 62, and that's what I'm trading. So we just had a bit of a heads up. So we got a bit of Aussie data coming out. That's right. Again, we'll see what the reaction looks like. So they're the levels that I'm sort of looking at, and the market has been agreeing each time on these. And as I said, look, if we see US dollar DXY sort of continue and the markets continue to sort of buy this thing up for a bit, that could be, well, that will be what pushes Aussie down under these levels here. Equity markets are absolutely ripping through the roof. Aussie should be doing a bit better off that. Copper is actually sort of holding up there. It's starting to range a little bit. That should be helping it out. Yuan's a bit stronger. That should be helping it out. But with all these bits of, you know what I mean, supporting corresponding corresponding data, um, you know, it's still being sold into. I think this was a big tell from yesterday's session. And we're just so seeing this pop down. Have a look what that data come out as. It's a big tick up there. Everyone's feeling pretty confident, particularly from that 6%. Again, look, this isn't a massive bit of data, but we'll see how the Aussie reacts to it after it has a second to think about it. So anyway, like with all these sort of things, like as I said, equity markets are ripping to the highs. Um, on that as well, just a quick look at this. Yep, equity markets still ripping to the highs. Copper's not doing too bad. One's stronger, so it should be doing a little bit better than it is. Um, and this is what I'm saying, that if these things, oops, if these things start to give way, so when you've got all these sort of bits of data and all these things supporting it, and it's still not being bought, what happens when those last little pillars, equity markets up, copper holding up, what happens if copper falls over? What happens if equity markets fall over? What happens if US dollar sort of picks up a bit and the yuan weakens? Well, they were the only things that were keeping it from being down here already. Well, you know, you'd think they're the last little pillars that you knock out and the whole thing sort of falls over. So US dollar is definitely, obviously, biggest driver with these. It's looking like it's sort of like, you know, definitely looking like it's poised to sort of push it down. The one is actually sort of strengthening a little bit. So, you know, I'd actually sort of almost give this a little bit of a push up because it should be moving like this. But again, RBA still, as far as I've seen, unless there's been any other sort of revelations with it all, have sort of still got the idea of, I think, 4 or 5 cuts till the end of the year. So it's obviously something that's going to be weighing on it. And a big thing, obviously, particularly with this cross, not just Aussie dollar against other crosses, is the fact that RBA is looking to cut, and the Fed's looking more increasingly like they want to hold. So we'll see how this acts. Look, from a sort of technical standpoint, you can see the buyers have stepped in here a number of times. So, you know, we would expect it to at least sort of consolidate this area down here. That little bit of data isn't like sort of the biggest mover of it all. It's just a, you know, just a little bit of a snapshot of obviously sort of a bit of a sentiment, but positive. So, yeah, maybe a little bit of a consolidation around the lows through this session, but looking very susceptible to a break down lower. Gold got absolutely hammered as well through this stuff, so this is the area that wanted to sort of see it come back down to. This has been just an unbelievable trade. The last couple of weeks has just been insane. Big gap down over the weekend. Really just sort of sat around this sort of area, you know, this level of support that we sort of had, you know, previously marked out. Sat around there through all of Asia. And then that data came out and got hammered down. One bit of note I noticed with this was there was a period back here, which was, it must have been, I think it was this session here. We had a big gap down. Let me see it on a lower time frame, possibly. This one here, it doesn't show it as big. It was actually a $60 gap, or at least on my thing, it was a $60 gap. Gapped down, they bought it straight back up. So this is just after it came off the highs of 3,500. A couple of sessions later. The market here gapped right down and kept selling it down. And as you can see, sort of dribbled into this and then just went bang straight down here. Just something, it's not a major thing. It's just something I took note of yesterday that, you know, previously with the big gap down, they tried to buy it straight back up. The buyers weren't there this time and obviously slammed it down. So over the weekend, on the weekend sort of wrap that I did, this was the area that I was like, look, we had a bit of a wedge, but this didn't look like conviction. This doesn't look like these kind of buy up periods. And you can tell why. Like to a certain extent, obviously hindsight's beautiful, but the thing is, you saw this little pop up here, but this is like a dribble, 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 dribble up. You know what I mean? This is what gold looks like when they're buying it more recently. Smashing, just going, vertical. This was a warning sign for it all, and that's what I sort of called over the weekend. Hence the short outlook on gold. So look, again, it's pulling back here. We're back at these lows that we sort of had previously, what, a week or so ago. It wasn't very long up here. So now we've officially got this lower high coming in. I mean, we kind of already had officially had the lower high in. Drag it through here. Should this be a channel? Not a big fan of this line down here, but it could be something just to sort of keep an eye on. But I think sort of at the moment we're back at the 61%, the 38% of the yearly run, that big massive confluence. I think this is still going to be an important area to see what the market does. I'm not seeing so much anymore, but down over here, these kind of levels here. Previous highs, 38% of the whole year's run, 61% of this last big push up here. I think this 3160 is still the kind of where we'll kind of be looking for gold in the short term. And then, really that's just coming off another, 430, another 300 buck move south. I'd imagine some buying action around that 3160. Should you break underneath that? Well, there's quite a big lot of air down under here. If we see them sort of try and buy it up, like same sort of thing we saw, with the Aussie, should they sort of come down, buy it up, and then come back down through it for a second time, that's where we sort of look around maybe 3,000 or so, I would say. So yeah, I think there's definitely there's a short-term kind of move that I'm looking for towards 3160, and then really see how strong that buy conviction is there, because you're coming into the bottom of this support pretty quickly. So look at how deep the bounce is, because this is where the fibs can be used, and you don't have to wait for the whole move to sort of play out. But if we sort of drag this down, and this is obviously just planning ahead, let's say this is the move here. Down. So say market sells down to 3160, and this bounce comes up, 23, 38%. If it doesn't clear back up above 3270, it leaves it very susceptible to going sub 3000. And that's how I'm going to be playing it. All right. Anyway, let's tick on. We got silver. Silver actually respected the chart beautifully yesterday. These sellers came in like pretty much on the money. Like there's falling resistance, bang, respected it again, came down. I didn't think these little flare down bits would be enough to hold it, but I guess we can kind of say, look, bang, buys at this zone here. So it's inching its way down. I haven't been really super interested in silver, to be honest. I think it's just an absolute chop fest. I don't have really strong sort of conviction on it. I'm feeling more continued downside, but as you can see, it is still bouncing back each time, albeit to take note of the fact that the bounces are coming in lower and lower and lower. You get a nice little sort of solid line here. Again, look, you take out this level, you're looking down lower. USD runs for a bit, gold comes off. These kind of things, if they do start to happen, then I reckon we could sort of see silver come off as well and just sort of follow suit. But I haven't got a super strong conviction with silver at the moment. If we do get back down, say around that 28, 29 level, I'd probably have a look at longs. But up here, I'm not really interested. Flick along, we got copper, excuse me, and copper trying to find itself a little range through here. Quite a big range as well, 5-6% range. Look, it's come back in line with a previous level that we've had marked. This is going back uh, from like June 24 or something. I don't know why I've got it marked exactly right there. Maybe on a daily. Yeah, there's kind of at a daily level of selling it down. There's a little bit of support, broke, retest. Probably going to sort of put it down a little bit. But regardless, can see that, look, they're still kind of valuing it around this 470 level here. Look, it's hard to sort of really call what's happening with copper here because, I mean, look, you know, what you got to think, and this is the whole big thing, you got to think what part of the structure you're in. Because here you've got bounce, support, resistance. Is this trying to put in a lower high to get a bigger move like this? Or is this just a little pause before we come back down to the lows over here? Again, it's quite a tough read on a few of these things here at the moment. Um, I think short term, pretty much just play the range. If this does happen to sort of come down and test the lower side here before flaring up and testing the top over here, then I would say you've probably got a high chance of breaking out because if this were to be in like a sort of true set of a range, you've got a double bottom here, that's fine, you got the top. You'd want to see range, bottom, top, bottom. You need to touch the top here. If you go bottom, top, bottom, and then fizzle out without getting there, then you can see that the sellers are continuing to move their little sell bid down. You could probably actually sort of continue. That looks pretty good because this is just a little flare out move, which is obviously to sort of stop out a bunch of people, fake them out before smashing it down. I think this falling resistance is pretty much what we need to be looking at. So, above this falling resistance, you run into your horizontals, which are, the bottom side of that little support area that we saw. So, this was the breakdown area. It became a resistance. So I think sort of like, let's get this out of the way so we can see a bit better. I think this falling resistance is the first thing you need to get across. But really, till you're back above 482, I think downside is probably looking like the play here. And if we sort of come back down to these lows here, before we sort of do any attempt to break out, I think that's potential for us to go down a little bit lower. And yeah, I don't know if that'll hold. I think, honestly, I'm starting to get a little bit more cautious on a few of these things because I think if US dollar becomes a viable option, I think it's going to be drawing a lot of energy from a lot of places. So I don't foresee necessarily a situation where US dollar's running rampant and copper's also pumping, but we'll see how that goes. And finally, with China, this thing is all over the shop. I've been looking at this horizontal here for quite a few months. As you can see, I thought it was about to break down. No, flew back up. I was going to come here, come back down, flew back up. All of my sort of, all my sort of little plans of attack over here all were predicated on coming down to this 722 level. We got the breakdown, got the retest, double bottom, faked out, came back in, but now we're back down here again. So it's really very, very choppy. And this is the thing as well. It's sort of like it's a hard play. You can see that this little area that we already had marked, which was like a little sort of resistance support, showed up again perfectly as the little resistance. So I would be inclined to almost sort of say this is a bit of a range with it all. I think if US dollar runs against all the other major currencies, i.e. DXY, sort of breaks out, I think this could drift back up over here. I don't think we're necessarily breaking down through here. I think if we do break down through here, that could give Aussie a bit of a lifeline. But I think sort of like potentially we see US dollar get bought up against all the other majors, and obviously get bought up against the yuan and Aussie and that kind of stuff as well. So I'd be looking for a little bit of a bounce and pretty much playing this little range. I think maybe outside this box is where we're going to see our direction. But yeah, I don't think we're about to get the breakdown down here quite yet. We'll see how that one goes. Look, that's about it. I'll quickly look at gold silver ratio because this thing's absolutely all over the shop as well. Um, I was calling 108, then it looks more like a flag. Then the flag was kind of blown away, and he got into a little bit of a wedge. The wedge is now broken down. This is just incredibly choppy. And if you look at a couple of sort of analysis of sort of people online, there's like, I've seen some people say, oh, every time you look at gold silver ratio at 101, it doesn't stay there very long. Of course, as it's coming down like this, then it grinds back up there. I've seen other people say, oh, once it gets up above 101, it stays there for quite a while. Look, this thing is just an ugly chart. It was a great little breakout through through this range. That was amazing, that trade. Since then, is just chop city. You can't even really call. I mean, look, you could call this, and I'm not a big fan of this, a very, very ugly, wonky head and shoulders. Um, Look, till it's under 95, I'm just looking for this thing to sort of chop and range a little bit here. Um, and as you can see, silver's been holding up a little bit better than better than gold. But as you can see, it should be holding up a little bit better than gold as this is moving back down like this over here. All right, that's it from me.